Well, let's go now to our exclusive conversation between Citigroup CEO Vikram Pandit and Charlie Rose at the Securities Industry and Financial Markets Association annual meeting. Here's what Pandit has been telling Charlie.
You will. Welcome.
Thank you. Good to be here with you. And by the way, great to be with all of you. Have a great day.
Take me back, and all of us, back to 2008. And what it was like, and what moment do you remember most, and in a sense, what have you learned since?
Well, it's thankfully it was a long time back, and although we're seeing some of the signs of 2008 today, I do think it's fundamentally different today than it was back then. Of course, Charlie, when you go back and think about what brought all of this on, it was leverage. And we're still living through the impact of leverage. It was about consumer leverage, it was about bank leverage, it's about government leverage. It all seems wonderful to borrow just a little bit more when things are going good, but invariably, the history of crises over a long period of history is that leverage is at the heart of it, and we learned yet again what happens to the world when leverage rises to levels that are unsustainable. And we're still living through that today in the form of what's going on with the governments, including our own, but not only our own, and certainly we're all watching what's going on in Europe. The other thing that we've learned, and I'm not so sure it's new as much as it came out in no unequivocal terms, is that markets and market confidence move a lot faster than policymakers. And confidence is a big part of what it takes to deal with crises, and we've got to figure that out even better. And we're living through that today, again, in Europe. When the markets get to a point policymakers react, we've got to make sure that those couple of things are more synchronized than one after the other, and that's a real danger. I think it's a real issue for policymakers to deal with on an ongoing basis. And for us, I'll say that the lessons are really simple. We understand very well and knew very well that banking had to go back to its root mission, which is to serve our clients. Banking has to be a means to an end, not an end in itself. And so for us, the strategic restructuring was straightforward. We went back to the basics of banking, about helping our clients, trying to figure out why we were in business, what we were good at, and why our clients needed us. And by the way, we took a number of actions which led to realizing we needed to sell 40% of the company, or 40% of the assets of Citi, to bring it back to its core mission of serving our clients. We've been doing that very, very steadily. And today, as I look back, clearly there were lots of challenges at that time, but in many ways for Citi, we're thankful that we got started early and understood that we had to go back to why banks are in business in the first place, which is to serve the economy.
And so where are the toxic assets?
Well, let me rephrase that question. We did have some challenging assets, but there are lots of good businesses. These 40% were not about only assets that we wish we didn't have on our books, but it was about businesses like Primerica. It was about Smith Barney. It was a lot of other businesses, which are great businesses, but they were really not core to the mission that we were on. For a period of time, it felt like being a supermarket and financial services businesses was the right strategy. And of course, as I looked at it, which every CEO should do when they first come into the job, and I looked at where the world was going, where regulation was going, and what we were really good at, it became pretty clear we're a bank, not a supermarket. So we took these assets and we said we're going to sell them. And so, by the way, that number was about $800 billion-ish, and last quarter I think we were $300 billion-ish in assets, and today with some of the changes we've made and some of the assets that we've sold and moved, we started at 40% of assets as Citi Holdings. Today we're down to 13%, and I wouldn't doubt that in the near term we get down to 10%. Then it becomes an issue that's really not core to Citi. The core business now is the 60%, what I call Citicorp, which is the business of connecting the world for our clients, taking U.S. businesses abroad, having them get a chance to export more, and for that matter, connecting clients. We have a number of clients around the world who are really global in their aspirations and their connections, and those are the kind of clients we serve best.
I'm going to jump all over the place, but
Okay, well, that is Charlie Rose talking to Citigroup CEO Vikram Pandit.